Okay, hi everyone. Let me share the screen. Let me check. Okay, cool. So chat box should be working. Let me see attendances. Hi Derek. Hi Jeffrey. Hi Kubo. Hi Salvatore. Hi Samantha. Hi Richard. Hi James. James or Jane? Janice? Sorry. Hi Brian. Hi Bob. Hi Muhammad. Hi Frederick. Okay, I still see the attendances moving. Hi, Han. Hi, hi, hi. Okay, cool. Can you guys let me know in the chat box if you, hi, if you guys can hear me loud and clear, if you can see my screen, if you can see me. It's not important that you see me, but more importantly, you can see my screen and you can hear me loud and clear. Okay, loud and clear. Bob, thank you. There's another Bob in this chat, by the way, in today's webinar. All good. Okay, cool. Yeah, so I finally figured out how to fix my webcam. I think those who were like attending the last few weeks noticed that my webcam was spoiled. I didn't know that my computer had a shutter. There's a webcam shutter. I don't know who turned off the shutter, but all I had to do was like unlock the shutter and then my webcam started working again. Okay, anyways, hello everyone. For those who just joined, hello, welcome to today's webinar brought to you by IronFX. I'm really excited to have all of you here with me. Whether you are a beginner, let me see. Okay, I think most of you, like your names are very familiar to me, so I think this shouldn't be your first time joining our webinar, right? If you are new here, just say hi, don't be shy. I don't think the other participants can see your chat, right? Just checking. Salvador, can you see Brian's chat? No. Okay, yeah. So don't be shy. You guys don't have to be shy. You just, if you talk in the chat box, I'm the only one who can see it because I know like maybe some of you are introverted. Introverted. That's why you chose trading. Trading as the means of, hi Dean, welcome, of making your income. Okay, but you don't have to be shy. If you say anything in the chat box, I am the only one that can see it. Okay, cool. Do let me know, other than those that have been here every week, do let me know how long you've been trading, how trading's been working for you. If you're seeing any progress, if there's things you want to work on, just let me know in the chat box. I want this to be a little bit more interactive so that I know that you guys are hearing me. I'm excited to learn today. Hello, Dean. Let me know if you guys are a beginner. Okay, that is very important. Hi, Banas, welcome. It's very important. Why? Because today's topic is quite, I wouldn't say this is a topic for a beginner. Okay, but I mean, you're already here. We can just learn it one time, and then the next time when you are a bit more ready and you want to relearn this topic, at least you already have a gist of it. Okay, so before I continue, you guys know how this works. I need to do the disclaimer, just a quick and important note before we move forward. This webinar is intended purely for educational purposes. Everything I share with you guys today, from strategies to tools, is meant to help you understand. Hi, Jamilu. Hello, hello. Hey, Jamilu, I know you've been like attending my webinars for a while now, like from even before I took a break. This was like years ago. I don't know if you remember if I've done Elliot Wave before. If you attended any of my Elliot Wave webinars, we're gonna do that again today. So yeah, just let me know. Okay, so sorry, back to the disclaimer. Everything I share is purely educational. It should not be construed as financial advice, investment advice, any form of you know, advice that will lead you into losing money. Okay, so please take this purely as educational. We are here to learn. We are here to grow as traders. Trading is a marathon. It is not a sprint. I know why so many people are in trading. They have this mindset is that trading is a get rich quick scheme. You cannot get rich quick with trading. You can get rich, right? You can get rich. I totally agree that there's a lot of money to be made in the financial markets, but it is not a fast thing. It is not an overnight thing. It requires you to like sit down to learn the skills. So please do not risk more than you are able to lose. If anything, I actually encourage you guys to use a demo account. I lost over $500 yesterday trading gold. Will Elliot Wave help me in trading? It will definitely help you in trading, but you need to master all the other things before coming into Elliot Wave. So that's why I asked if there are beginners in today's attendance, because look, I can teach you Elliot Wave, but you need to master other things like Fibonacci. You need to master support and resistance. You need to master liquidity. You need to master price action. You need to master chart patterns, candlesticks before you can do Elliot Wave. Yes, multiple times. Okay, thank you. I keep coming back to this topic. So this is not the first time I've taught this topic, because this is one topic and one technical analysis tool that I have used that has made me a lot of profits in trading. In fact, I think the price of Ethereum today is 2,400. It was way higher at one point. Okay, I got in Ethereum, and this is like 70% of my entire life savings. Okay, so I'm talking about hundreds of thousands. I put a lot of money into Ethereum, and I got in at $1,200. Okay, so you can see that I've doubled my money as of today. If I just exit right now, I would have doubled already, but I don't plan to exit. I plan to hold it for even longer. Okay, why? Because when I use Elliot Wave to do my analysis on Ethereum, Elliot Wave told me on the dot, on the spot, to get in at 1,200. I did, and Elliot Wave was correct. Today, I am in very good profits. Okay, so that's like all in for me, by the way. Like, I put so much of my capital in that. Okay, so moving on. Before we dive in, let me take a moment to introduce myself. Okay, my name is Cassandra. Please feel free to call me Cass. I'm an investment analyst at Everest Fortune Group and also a prop trader. So at Everest Fortune Group, we specialize in Forex and equity research. We've been recognized for one of the top research firms for several years running. Basically, what our team does is do a lot of like back testing, a lot of like research on trading and investments, and we kind of just follow the markets very closely. So a lot of our research and our data is also widely available and being used by other institutions. So sometimes the very material that you see online or wherever is materials that were created by us. So as for me, I actively trade as a prop trader and have successfully passed 3 prop firm evaluation. I am in the midst of passing my 4th. Okay, I am currently taking another prop test right now. Give me a moment, let me check. Okay, as of today, I am I don't know if you guys can see that. Can you guys see? I am currently $1,200 in profit, which is 1.2% for my $100,000 account. Okay, I am in the midst of passing my the 4th prop trading test. So for those who don't know what prop trading test is, basically I personally use FTMO. I used to use my Forex fund, but my Forex fund went bust. So I lost 2 of my accounts. Yeah, I lost 2 of my accounts. I was like 200,000 funded with my Forex fund, and then they just went bust, and I lost my accounts, and that's totally fine. So back to prop trading, for those who don't know what it is, it basically requires a trader to do 10% in profits to pass the test. It used to be 10% in profits within a month, which is 22 trading days, 30 days. 30 days within a month, or 22 trading days because it's only Monday to Friday. But now they've made the rules really lenient because I think a lot of people are failing. They've made it 10% as long as you make 10%. It doesn't matter how long you take, as long as you make 10%. So I am currently in my second week, and I am about 3+% in profit. Okay, it's not great because last week I didn't really trade. So this week, if this closes, I should close at 4% profit. So I should end my week at 7% profit. Sorry, I should end my week at 5%, 6% profit. Because I think a few weeks about last week or last Friday I did 2%. Last week I did 2%, and then the rest of it, yeah. Okay, so the whole point of me sharing this with you guys is to let you guys know that you guys are in good hands. I am a professional trader. I trade full time. So anything you guys want to ask me about trading, don't be shy. Just ask me in the chat box. I will be here to answer you. I'll try my best to help you. Remember, the whole point of you guys attending this webinar is to learn, right? And the whole point is to help you become a better trader. So if you have a question that you think will help you be a better trader, don't be shy. Just ask. Okay, I will answer you to the best of my ability. And if you are shy, you don't want me to mention your name, I won't. I will just answer the question accordingly. Remember, stay focused on the goal. The goal is to be a profitable trader. Back then, I've been doing a lot of research on the stats as well. So back then, I think years ago, the number of profitable traders in the market was only like 1 to 3%. I think it was 3% in the entire world. This is retail traders, okay? That means in 100 people, only 3 people are profitable, consistently profitable. Now the percentage has increased to 10 to 20%. You know why? Because the education materials are widely available now. It's widely available, so it's easier for people to master trading now that there's so much information out there to help you become a better trader. So please do focus on becoming profitable. And I don't just mean profitable for 1 week, 2 weeks, or 1 month. I mean consistently for many, many years. Okay, so for that, you do need to be very disciplined. Okay, so moving on, I'm going to talk about today's topic, which is Elliot Wave Series 1 Introduction. I'm going to do part 1 out of part 3. This is not a topic for a beginner, okay? This is something that took me years, months, okay, months. I wouldn't say years, it didn't take me that long. Months of constant practicing to perfect. I used to use Elliot Wave a lot. I don't use it anymore because for those who attend my webinars often, you know that I always say I have 2 kids who are under 2 years old. I've literally 1 toddler who is in her terrible twos. She's constantly throwing tantrum, throwing toys. She's climbing everything every now and then. She's just, every time you look at her, she's always in trouble. Okay, and I have a newborn baby who is 6 months old. Yes, I just gave birth 6 months ago. Okay, so my schedule doesn't allow me to sit in front of the computer as much as before I was a mother. So I cannot use Elliot Wave because Elliot Wave is very, very, very accurate, but it does require a bit more time compared to other technical analysis. Elliot Wave requires you to do a little bit more in-depth analysis. It is very accurate. I have to say, if you can master Elliot Wave, you are going to make a lot of money. It's just that if you have the time to master Elliot Wave, kudos to you, man. Nowadays, I try to keep my trading as simple as possible because I cannot spend too much time on the charts. Okay, so Elliot Wave for me is out, but if you have time to master Elliot Wave, go for it. Definitely go for it. Okay, so agenda for today, introduction to Elliot Wave, the Impulsive Wave and the Corrective Wave, and Fibonacci Elliot Wave. So we're gonna deep dive into the introduction. Let's start with that. I want to try to finish these slides by like in the next half an hour, then I'll have like 15 minutes of hi Edwin, hi those who have just joined and I haven't said hi to you. I don't know who has joined because this attendance list is still moving. Okay, I want to do the introduction and this entire topic within 30 minutes, and then we will go to the charts and then I'll kind of like draw it out for you so that you guys have a rough idea of how Elliot Wave works. Okay. Okay, cool. So we're gonna do how did Elliot Wave come about. So this guy, Rolf Nelson Elliot, he's an American accountant. He was born in the 1800s, okay? He worked in the railway industry, then a corporate consultant. In the 1930s, he was forced into early retirement because he was sick. Okay, this became a turning point for him. So during his recovery period, Elliot began to study deep dive into the stock market. Okay, this is when his life changed completely. So he will just study and study and study the charts. Basically what I do for a living, I just study the charts all day, every day. Well, not every day because I have kids, but as much as I can, I'm studying the charts. Okay, so he noticed one thing when he was studying the charts. Price does not move randomly. Okay, he noticed that the markets did not move randomly. In fact, there was a repeating pattern that keeps happening and a repeating cycle. Okay, so that's when the Elliot wave came about. Okay, so these patterns seem to reflect emotions and the psychology of the crowd and retail traders. He believed these patterns were governed by natural laws, much like nature. Okay, that being said, right, guys, the last time that I used Elliot wave was so my daughter was born in 2023, right? My daughter's born in 2023. I got in that my brain has suddenly just stopped working. Yes, I got in that Ethereum trade in 2023. Yeah, 2023 or 2022. I can't remember. So the last time I personally used Elliot Wave was a few years ago, was 2 to 3 years ago. I don't know if today's market Elliot Wave still works very well. I think it should, because the market is constantly just repeating itself, right? I don't know how well Elliot Wave works today, but 2 to 3 years ago, it worked wonderfully. I have made so much money on my own personal account. Actually, Elliot Wave was the one that helped me past my FTMO account, my Forex fund account a few years ago. I actually passed my Forex fund in one trade where I made 10% in one single trade. I made 10% in one single trade, and I use Elliot Wave to do that because Elliot Wave can help you pinpoint the exact zone, the exact price, not exact price, but the exact zone, and then you can narrow down the price to where price is going to reverse exactly. Okay, so that's how I made 10%. I passed my Forex fund in one single trade. And yeah, so I really believe in Elliot Wave. I just don't know how well it works today. But if you guys have the time, go and practice it and let me know. The next webinar, let me know. Let me know if it works. I personally don't have the time to go and do it anymore, but let me know if you guys do master it. Okay, so then the other thing is about Elliot Wave, you kind of need to combine it with other things. You need to combine it with like Fibonacci and natural sequences. That's why I say Elliot Wave is not a topic for beginners. It is a topic that requires you to also master other things like support resistance, Fibonacci. Okay, you need to master those other stuff before you can master Elliot Wave, because Fibonacci is strongly used in Elliot Wave principles. Okay, so in 1938, Elliot published the wave principle. I wrote it down here. The wave principle with the help of some guy. Okay, so he proposed the market moves could be broken down into a series of waves, each following a rhythmic and predictable structure. So if you guys want to go in depth into Elliot Wave, do go read up on this book, The Wave Principle. Otherwise, he also did publish another book called The Nature's Law, The Secret of the Universe, where he claims that his discovery of Elliot Wave is very much linked to the universal application beyond just the stock market. So he thinks that Elliot Wave is also, like, the wave pattern is also related to life, and we're just basically in a pattern. I kind of believe it, right? Because life is just a repetition. Like right now I'm gonna have kids, my kids are gonna grow old, my kids are gonna have kids, their kids are gonna grow old, I'm gonna die, they're gonna die. You know, life is just a repetition of cycles. So in his book, he talks a bit about that. That's not about trading anymore, but yeah, if you are in depth to see what he has to say, go get the book. But the wave principle is about trading. Okay, so moving on. So this is the pattern that he noticed. He noticed that price moves in 5 waves. So the main points are Ralph Nielsen, based on the idea of market moves in a predictable pattern driven by investor psychology. These patterns repeat over time, and they are called waves. So Elliott wave theory suggests that price moves in 5 wave trends followed by 3 corrective patterns. Okay, so 1, 2, 3, 4, 5 followed by 3 corrective A, B, C. Okay, sometimes the correction can be in 5 waves as well. It's not just ABC. Sometimes it can be A, B, C, D, E. We'll look at that in a while. So commonly used at Forex, stocks, crypto, and commodities trading. Okay, Elliot Wave principle is more than just a technical analysis tool. It's a way to read crowd behavior in the market. So what Elliot discovered was that the mass psychology tends to move in repetitive cycles of waves. The insights allows us as traders to anticipate market direction with greater confidence. Okay, so we need to first identify the 5 waves. Okay, this is not for someone who cannot identify patterns, okay? If you do want to use Elliot Wave, you want to go in depth into Elliot Wave, I need to tell you right now, Elliot Wave is not for someone who cannot identify chart patterns. Okay, so I'll give you an example. We can go to TradingView later. If you cannot find the 5 waves, it's going to be very hard for you to use Elliot Wave. And that's totally fine. You don't need to use Elliot Wave. Elliot Wave is just one way to make money in the markets. There's so many other ways to make money in the markets. You can use smart money trading. You can use ICT. You can use price action. You can just use like divergences. There's so many ways to make money in the market. Elliot Wave is just one of it. If you cannot master it, fine, just move on, just find another way, okay? Right now, I am still making monies in the market and I am not using Elliot Wave. I am just using a lot of like support and resistance, a lot of like ICT, yeah, because those doesn't require me to stare at the screen so much. Okay, so let's look at impulsive waves. So basically, what he noticed is that wave 1, wave 3, and wave 5. I'm going to take my pen. My pen. Okay, so wave 1, wave 3, and wave 5, basically the ones that are marked black, these are called motive waves or basically impulsive wave. That means this wave is moving in the direction where trend is going. So every time I ask you guys, do you think price is going on an uptrend or a downtrend? Because if you can identify trend, I really feel like you already won 50% of the battle. Okay, so 135 is usually moving in the current trend, and 2 and 4 are basically just corrective waves. They're basically just pullbacks, right? Because price is moving in a zigzag pattern, right? So these are the pullbacks and these are the impulsive waves. How do I delete everything? Okay. Okay, everyone's so good. So far, so good. Any questions as of now? Why are there corrective waves within the 5 waves? Okay, that's a very good question. Okay, so someone is asking why is there corrective waves within? Yeah, so I can understand where the confusion is, because earlier on I said it was 5 waves up followed by 3 waves down. But why is it there are 2 waves here? Okay, I will this is gonna blow your mind so much. Let me see if I have a slide for that. Okay, there is a slide for that. The reason why there is, what in the world? Okay, the reason why there are pullbacks within the 5 waves is because within every wave are sub-waves, okay? Within every waves are sub-waves. So there's actually a 1, 2, 3, 4, 5 here, followed by a B, C, followed by a 1, 2, 3, 3, 4, 5, followed by another ABC, A, B, C. So every time there's a pullback, price is doing the ABC. And then later on, we'll have a giant ABC. After the 5 waves is done, you will have a giant ABC. And within that ABC, you have mini ABC, A, B, C, A, B, C, A, B, C, okay? It is basically waves within waves within waves within waves. This is not for beginners, guys. This topic is not for beginners, okay? But I'm just gonna do it. Those who are new here, you just listen and absorb as much as you can. But basically, that's Elliot Wave requires you to do multi-time frame analysis. So you start with the daily chart and then you go down to the 4 hours, then you go down to the 1 hour, you can go down to the 15 minutes, you can even go down to the 1 minute. okay? Because within every wave, there is a subwave of a subwave of a subwave of a subwave that never ends. Okay, so yeah, if you can master this, I promise you, you're gonna make a lot of money. It's just you're gonna need a lot of time to master it. Okay, so think of it like this. The market is trending up. Then the first wave is the first move up, okay? The pullback, the second wave is the pullback. Wave 3 is always or usually the strongest wave up, okay? Is the strongest wave up. Wave 4 is another consolidation or a pullback. And then you'll do a final push of wave 5 to complete the 5 waves. So once the wave is completed, you can now start with your A, B, and C. Now I'm going to show you guys how to do this and what are the rules for Elliot Wave. Okay, moving on. Oh, I need to delete this. Okay, so wave 1, the start. The market sentiment is neutral and it's still bearish if this is a reversal. Few traders believe that the trend has started. So you can see that wave 1 is usually like very short because there's a lot of like uncertainty. Is this the start of wave 1? Is this like is this just a pullback? Is this a lot of people are confused? So okay, so only driven by smart money and early traders are very familiar with wave 1. Okay, so I personally, as a trader, when I was trading, I usually trade wave 3. Because for you to identify wave 1, I'm going to tell you, if you can master identifying wave 1, you can go apply for a job as a hedge fund trader. Because if you can identify wave 1, I have to say you have some skills that very little people have. I don't have that kind of skill, or I didn't put in the time to master that skill, but I usually trade wave 3 to 5, and then I trade 4 to 5. Okay, so it looks like this, right? I will trade 3 and then I will trade 5. That's why I always tell you guys, if price is moving up, I want to look for a buy. If my price is moving down, I want to look for a sell. Reason why? Because I'm looking for the entry for wave 3 and I'm looking for the entry for wave 5. If you go against trend, you're basically playing wave 2 and wave 4. Sorry, that's not wave 2. This is wave 2. Wave 2 and wave 4. If you're playing wave 2 and wave 4, you're basically playing the ABC. I don't like playing the ABC. I like to play the 1, 2, 3, 4, 5. Okay, I'll tell you why I don't like, because sometimes the ABC can fall short and it doesn't reach where you think it's going to reach. Okay, so this is what it looks like. So within wave 1, there's 5 waves. 2, ABC, wave 3, 1, 2, 3, 4, 5, wave 4, ABC, and then wave 5, 1, 2, 3, 4, 5, and then you start with A, B, and C, and then you have this like sub waves inside. Okay, so it's really crazy. It's very confusing. I totally understand if you guys don't master this. It took me a very, very, very long time, and the whole time I was learning Elliot Wave, I'm just sitting there like, oh my gosh, I'm so mind blown. This is so crazy how accurate this is. Accurate, but very time consuming. Okay, so let me move on. Okay, so when you are doing Elliot Wave, for me, it's very hard to detect the end of the corrective wave. Yes, it is hard to detect the end of the corrective wave, but that being said, because there are rules within Elliot Wave, just give me a sec, actually. I didn't include all the rules because it's so many. I didn't include all the rules, but yeah, there are many rules of Elliot Wave that if you follow it, it'll be easier. What time frame is to be observed effectively? Okay, so I personally used the daily, the 4 hours, and then the 1 hour. Okay, so it's the same day trading method as the rest. Okay, there are so many rules. Hold on, I am in this like actually, if you just Google like Elliot Wave rules, all the rules will come out. Okay, all those rules are very suggestive. The one that is set in stone are the 3 golden rules. Okay, these are the 3 golden rules in Elliot Wave. So rule number 1, wave 2, I need my pen for this. Wave 2 cannot retrace more than wave 1. Okay, so wave 2 cannot pass the start of wave 1. If wave 2 passes the start of wave 1, we are no longer in a impulsive wave. We are no longer in an uptrend. Technically, we are in a downtrend, right? Technically, we are in a downtrend. If wave 2 passes wave 1, it means that we are in a downtrend, and instead of uptrend, it also means that it is invalid. Okay, this uptrend is invalid. Okay, cool. Rule number 2. Sorry, I'm just seeing if there's new messages. Okay. Rule number 2. Wave 3 cannot be the shortest of the 3 impulsive wave. Okay, so it cannot be the shortest. It can be the second shortest. Sometimes wave 5 is longer than wave 3. Sometimes it's very rare, very, very rare, but usually wave 3 is the longest. Okay, so wave 3 can be the longest or the second longest. It just cannot be the shortest. So wave 1, 3, and 5, wave 3 cannot be the shortest. Usually, wave 1 is the shortest, followed by wave 5, then wave 3 is the longest. Okay. Okay, number 3, wave 4 can never overlap wave 1. Okay, so this is the end of wave 1. And this is wave 4. Wave 4 cannot pass the end of wave 1. Okay, it cannot pass the end of wave 1. So let's say this is $5. Okay, I'm just giving an example. Okay, $15, and then this is $10. Okay, wave 1 ended at $15. So wave 3 moved to like $18, for example. So wave 4, when it pulled back, it cannot touch $15. It needs to be like $15.50, $16, $17, whatever it is, it cannot touch $15. If any, where's my slides? Sorry. Okay. If any of these rules are violated, it is not an impulse wave. Okay. This is the 3 golden rules for Elliot Wave. If any of these rules are violated, you immediately have a wrong wave count. That's why I think it's like, okay, Elliot Wave it's very accurate. It's just time consuming because you are constantly having to pull your rules out to see, okay, am I on the correct wave count? Am I on the correct wave count? Am I on the correct wave count? Okay, so hopefully later when we go on the charts, I did not prepare any existing wave count. So later when we go on the charts, hopefully I find a wave count. Honestly, if I find a wave count, I'm going to continue using it. I find a wave count, and then we're going to apply these 3 rules, and then we should be able to like find something, hopefully. Okay, moving on. Okay, so the real market psychology behind each wave, it's that wave 1 is an early optimism. So traders are always wondering, is this a fluke? Is this really the start of wave 1? Is the corrective wave actually done? Because, okay, so remember just now I said that corrective wave can do A, B, C, right? But sometimes it can do A, B, C, D, E. Okay, sometimes it can do A, B, C, D, E. So sometimes you're like, okay, A, B, C is complete. Now, the charts is starting with wave 1. You think it's wave 1, but actually it was starting with D. You know what I mean? That's why wave 1, I don't trade wave 1 because I don't know if it's really a wave 1. I only can confirm it's a wave 1 once wave 1 and wave 2 is completed. Okay, so the next thing is wave 2. So it's going back down. I told you so. It should be correct now. Wave 3, euphoria bills. This is the real move. So this is when most traders, me personally, I will look for entry at wave 3. And then wave 4, doubt creeps in again because now it pulls back A, B, C. You don't know if it's going to do an A, B, C, or you don't know if it's going to do an A, B, C, D, E. Okay, so once this is completed, then you have wave 5, the confidence. Now you get in for a buy again at wave 5. Okay, so the impulsive wave, the most powerful part of Elliot wave theory, this is the actual trend move. So when you think of a market trending, you're likely seeing wave 1 to 5, but the psychology behind these moves is what makes Elliot wave so fascinating. In the ABC wave, does it signal a trend reversal? Wait, sorry, I'm trying to digest your question. in a ABC wave, does it signal a trend reversal? Okay, there are things about the ABC that we will go into in a while that will tell you when it's ending. Okay, so when it ends, then that will be the trend reversal, and then that will be the start of wave 5. Okay, there are certain rules. So one thing I really like about Elliot Wave that there's a lot of rules. There is other than the 3 golden rules, there's a lot of, well, I wouldn't say rules, they are more like guides. There are a lot of guides that you can follow that will help you make your analysis more accurate. Okay, so sorry, where was I? But the psychology behind these moves is that what makes Elliot Waves more exciting is that wave 1 is a subtle and quiet, wave 2 is skeptical, wave 3 is powerful, everyone jumps in, and wave 5, the move is often running out of steam, but most traders don't know it yet. Okay, so the best wave to trade is actually wave 3 and then 5. Okay, so understanding this structure allows you to identify where you are in the trend and avoid entering too late, especially in wave 5. For traders like us, recognizing wave 3 early and knowing when the wave 5 is forming can make a huge difference. Okay, so you know, today that I'm teaching you guys this topic, right? Today that I'm sharing this topic, it makes me so like tempted to use Elliot Wave again because I know how accurate Elliot Wave is. I just know how many good trades you can get from Elliot Wave. It's just that I really don't have the time. But oh my God, as I'm reading all this to you guys and I am going through these slides with you guys, it makes me want to use Elliot Wave again. Okay, so corrective wave. There are 3 kinds of corrective wave that we're gonna talk about today. So now let's look. We've already done looking at the impulsive wave, the big strong moves that push the market to the direction of the trend. Let's talk about something traders often find more confusing or frankly very frustrating, which is the corrective wave. Why is it frustrating? Because there's so many different kinds of corrective wave. This is just the top 3 corrective wave that I've put in the slides today, but there are actually way more different patterns of corrective wave. Okay. Will it work with Forex? It works very well with Forex. It works very, very well with Forex. Okay, so these are the pullbacks, the pauses, the sideways chop. This is when, oh, you know what, guys? Anytime you go on a market and you see market moving sideways, you know that you are in a corrective wave, right? If price is moving sideways, then you know you are in a corrective wave. Okay, so, and like doing very weird things, like doing a triangle. Triangle is a corrective wave. Okay, so these pauses, sideways chops, this is when the market's breaches, it's not trending, it's taking a break. So unless we understand these corrections, we risk jumping in at the wrong time or misreading where we are in the wave count. So what are corrective waves? Corrective waves are the parts of Elliott wave cycle that move against the main trend. So the main trend, if it's going up, corrective wave will be going down. Okay, they are made out of 3 wave structures. We label them as A, B, C. So if the market is on an uptrend, the corrective wave will be in a short-term downtrend, typically seen as the counter trend move. They can vary in size, shape, and complexity. And because they don't follow the strict impulse of wave rules, they tend to confuse traders a lot, okay? So, but once you recognize the 3 main ones, which is zigzag, flag, and triangle, it becomes a lot easier to stay in control and make better decisions. Sometimes, other than these 3 appears, when that time happens, then you know what, too bad. You are probably gonna get in on a losing trade, but most of the time, it's going to be the zigzag, it's gonna be the flag pattern, and it's gonna be the triangle. Okay, so let's look a little bit about the zigzag pattern. So let's start with the first and most common correction, which is the zigzag pattern. So the zigzag, the market drops sharply in wave A, retraces slightly in wave B, and then falls again in wave 3. So it does a 5-3-5 structure. So 5-3-5, meaning that there's a A, B, C, D, E, followed by a B, C, followed by A, B, C, D, E. Okay, so one thing about Elliott Wave, there are so many like different rules. One thing I want to tell you guys is that usually, not all the time, usually, A and C is the same length, okay? A and C is the same length. If we so happen to be in a zigzag pattern, A and C is usually the same in length. Okay, this is the best corrective wave to trade because it is so easy to identify. Okay, so the pattern usually reflects a deep correction, one that cuts significantly into the previous impulse moves. You often see this after a strong wave 1 or wave 3, especially when the market is cooling off quickly. So the common trap here is to think that the trend has reversed, okay, when really it's just a sharp ABC pullback. Once wave C finishes, the trend often resumes in the correct direction. Okay, so the next one will be the flat pattern. Sorry, I'm going to go fast, okay, so that we can quickly finish this and then move on to trading view. The flat pattern is, unlike the zigzag, it's a sideways rather than sharply down and up. It follows a 3-3-5. So let me see, 3-3-5, A, B, C, A, B, C, and then A, B, C, D, E. Okay, I hate identifying this one. This is why I don't play the pullback. This is why if price is moving upwards, I do not sell. I just buy when price is moving upwards and I just sell when price is moving downwards. Because if you sell when price is moving upwards, you are basically playing the corrective wave, and corrective waves has so many like weird patterns that unless you want to go and master all of the patterns, all power to you. I wish you all the luck. I personally don't want to master all of this because it's too time consuming. So that's why I just play the impulsive wave. Okay, so sorry, where was I? Okay, wave A has 5 subwaves, wave B has 3, and wave C has, sorry, it's 3-3-5. So wave A has 3, wave B has 3, and then wave C has 5. So flats typically show in wave 4 positions right after a strong wave 3 rally, and they represent the market pausing or undecided. Okay, so wave B is the flat in a flat that often goes beyond the starting point of wave A, which confuses many traders. Then wave C comes in to complete the correction and the overall market direction continues. What happens, what makes flats dangerous is how quiet they look. No big moves, just chop, but behind the chop is a structure forming, and once it completes, the market often breaks out in the correct direction that it was trending in. Okay, so now that you understand flat patterns, you understand why you look at the chart sometimes and price is just going sideways. It's just ranging. So when it's ranging, it means that it's doing a flat pattern. Okay, the third one is a triangle pattern. It's very different from the other two. The triangle are made of 5 overlapping waves labeled A, B, C, D, E. Each leg gets smaller and the price coils into a tighter and tighter range. So it makes like that triangle. So whenever you see a triangle on the chart, you know that we are in a corrective wave. Once the triangle is done, price will continue in the direction of the overall trend. So if price is moving on an uptrend, right? Price is moving uptrend, you see a triangle forming, you know you should be getting ready to continue in the uptrend and getting in for a buy. Unless wave 1 to 5 is actually done and now there's a trend reversal. So triangles usually show up in wave 4 or in B waves of larger corrections. They represent the market that is consolidating, building energy, and before breakout. So there are a few types of triangle. The most common one is a contracting triangle, which is the one in the photo, an expanding triangle, a running triangle, and a barrier triangle. Sorry, I didn't put photos for that, but basically you know what a triangle looks like. It's very easy to spot a triangle. It basically looks like this. Okay, but regardless of the type, the key point is that after the triangle completes the breakout, it is usually very strong and often kicks off the final wave 5 or a new impulse wave. So it is usually after a triangle forms, we are usually entering wave 5 or we're entering wave 1. Okay, so when you spot a triangle forming, it's not time to trade just yet. It's time to watch, wait, and prepare for the high probability of the next move. Okay, so now let's bring this into real trading. Corrective waves are when a lot of traders get chopped out. Why? Because the moves look messy, unconvincing, and are very often full of fake outs. Okay, so do not trade corrective waves. Now I remember, you know what? I've always had this rule that if price is going up, I'm going to buy and I'm not going to sell. I always had this move, but then I think I was telling you guys recently that I know a guy who, even though price is moving up, he keeps selling and he keeps making money. So I'm just like, okay, maybe I should lose my rule. I shouldn't be so strict with that rule, and maybe I can also trade against the trend. Now that I'm doing this Elliot Wave slides for you guys and I'm reading through whatever information I've collected, I am very, very, very sure if price is on an uptrend, we only trade for a buy. If price is on a downtrend, we only get in for a sell. That's it. That's all that we're doing. Okay, so kindly check Elliot Wave in AUD USD. I used to have a setup for AUD USD. I don't know if I can still find it, but later when we go in the charts, we can look at it. Okay, I'm pretty much done, I think. Let me see. Why is it not going next? Yeah, we're not gonna go. I actually I do think this is important. Sorry. So when we talk about, you know what? We'll talk about this in the next webinar. Okay, Fibonacci with Elliot Wave. This is a checklist, you don't need it. So this is all the Fibonacci that you need to master. Sorry, I put a crazy face there because you need to master this first before you can get good at Elliot Wave. Once you master, it's basically retracement, projection, expansion, extension. I know people like Jamilu, you better have mastered this, Jamilu. You have been following me for so long. How many webinars will be for the Elliot Wave series? 3 parts. We're gonna do 3 parts. This is just the first part with just a very brief introduction. Okay, but basically you need to master other things to get good at Elliot Wave. Okay, so you need to master Fibonacci because Fibonacci will help you do the Elliot Wave. Okay, I'm done with the slides. Let's go into trading view and hopefully I can show you guys how to look for waves, wave counts. Okay, we can do the wave counts together. Okay, again, disclaimer, this is purely educational. When we go to trading view later, it may not be the correct wave count. I am just speculating. I am just hoping that I get the correct one. It may not even be the correct one because I have 13 more minutes to go through the wave counts. And 13 minutes is not a lot of time. Okay, let me tell you about my trade yesterday. Oh, why am I on a 1 minute chart? Yeah, so I got in here 16300. 1.16300. I got in at the high. I wanted to get in at 1.16400. I wanted to get in like here, but price was moving so fast I couldn't get in, but I got in here. Okay, I got in here for a sell. Why did I get in for a sell even though price is moving upwards? It's because price has already reached a very strong resistance. This is a resistance on the daily. This is a resistance on the 4 hours. This is a resistance on the 1 hour. It just makes me think that it's a strong resistance. I don't think price can break it. So I wanted to get in for that sell. My stop loss, sorry, I don't have a stop loss anymore because my stop loss is already below entry. Even if I get stopped out, I'm still going to make profits, just not as much if it hits my take profit. If it hits my take profit, I'm going to make a clean 4%. My take profit is at 15850. I'm aiming for quite low, but yeah. It's almost there. I could take profit now, to be honest. Let me see. How many percent am I in? Oh, sorry. If I win this trade, I'll be 3% in profit. Yeah, I'm currently 1.9% in profit. So a little bit more and I can close my trade. When are you going to start the Fibonacci series training? Guys, have I already done Fibonacci? Can you guys let me know in the chat box? I've vaguely remember I've already done Fibonacci with you guys. Like, Jamilu, do you? Okay, Jamil. Could that be the wave 23.6, 23.6? It could be the start of a wave. I doubt it though, because this could just be, you know, this could just be ABC. Remember, ABC can be flat as well. Oh, where's my pen? Wait a minute, where's my pen? Is my brain not working? Oh, there you go. This could be ABC. Right? This could be a flat. Yeah, you know what? Now that I'm zooming out, it looks like it is. It looks like it is. Hold on. Okay, I'm just giving a rough guess, okay? I could be wrong. This could be wave 1, 2, 3. Maybe we're not even done with wave 3. 4, and then 5. Okay, I'm just giving a rough guess. We're not gonna do this on EURUSD. Let's do it on XAUUSD. It's on YouTube. Go and check. Okay, yeah. So, Dean, you can check on YouTube. We are not gonna do this on. Okay, let's start with the daily. Wait. If I had to guess, this will be wave 3. This is wave 4, and we are now entering wave 5. Okay, if I have to guess. This is wave 2, and this is wave 1. Or, give me a sec. No, there's no way that is wave. Okay, so 1, 2, 3, 4, 5. Okay, cool. I'm just doing a very rough guess here, okay? There is a Elliot Wave tool here. Sorry, guys, I have not used Elliot Wave in a long, long time. Okay, so this looks like this is wave 1, wave 2, wave 3, wave 4, end of wave 5, and then this is A, B, C, and then we're starting it again. I could be wrong, okay, guys, because I only have 10 minutes to analyze. This is so much pressure. Wave 1, wave 2, wave 3, wave 4, wave 5. I could be wrong, okay? I could be wrong. Especially this last part here. I could be wrong here. Okay, but that earlier part, it looks pretty clean, to be honest. It looks pretty clean. So, wave 1, wave 2, wave 3, and then wave 4 and wave 5. Okay, how do I know that wave 3 is correct? All that could be wave 3. All that could be wave 3. That's true. We could still be in wave 3. Okay, how do I know that this could be wave 1, 2, 3? How do I know this is correct? Wave 3 is usually at least wave 3 is usually at least 168% of wave 1. Okay, so this part is usually 161% of this part. Okay, so you can see that this has satisfied. That's why I say there's so many rules. Sorry, because I didn't put it in the slide. it seems that Elliot Wave is not very useful in gold. It is very useful in gold scalping. I'll show you in a while. Okay, I'm not very sure about the rest of this, so I'm just gonna do this now. Okay, I'm gonna do this. Elliot Wave is so accurate. Okay, so within the sub waves, they are waves. Remember, within one, there's 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Oh, sorry. A, B, C. 1, 2, 3, 4, 5. Remember, within the sub waves, they are small waves. So if you go down to the smaller time frames, right? You should be able to find 5 waves. So 1, 2, 3, 4, and then 5, for example. I'm just giving an example. Okay? And then if I go down again to the 4 hours, oh, they won't let me go down. Okay, we'll start again, sorry. We're not going to use the replay button. Okay, I am going to assume, I don't know if it's correct, this is the end of wave 5. Okay, I'm going to assume this A, B, C. Wait, 1, 2, 3, 4, 5. Okay, cool. I'm happy with that. Then 1, A, B, C. Okay, I'm gonna assume this is the start of wave 1. Okay, again, I could be wrong because, yeah, I could be wrong. Okay, A, 1, 2, we are now in 3. I don't know where 3 is going to end, then 4, and then 5. Okay, now we go down to the smaller time frame. Within wave 1, I should be able to find 1, 2, 3, 4, and 5. Okay, and then this is the ABC. A, B, C. This is in wave 2. Okay, so now we are here. I'm assuming we are in wave 3 of XAU USD. Smaller, yes, it is the end of the wave. Okay, so I am assuming, yes, this looks good. I honestly, it kind of looks good to me too. I'm assuming we are at the start. We are in wave 3. Okay, so one, 2, 3, 4, 5. Okay, it could be that wave 5 has ended. It could be that wave 5 has ended. I don't know. I don't know if it's ended or not, but it could be that wave 5 has ended. Okay, let me double confirm with Fibonacci. Yep. One, two, three. Okay, I'm just going to assume we have ended the wave 5. So if this wave count is correct, which I don't know if it is, if this wave count is correct, technically, we should be starting ABC soon. So it could be A, B, C, C somewhere around here. Once C is done, then we're gonna start again. We're gonna start again with 1, 2, 3, 4, 5. Okay? That's how you use Elliott wave. I think it looks like we cannot use it for scalping because I'm on a bigger time frame. But if you think about it, if I go to the smaller time frame, right, I can go down to the 4 hours, right? And then I can start plotting A, B, oh, sorry. I cannot even remember the rules. There's so many rules, I cannot even remember it. Let me pull out my slides again. Okay, what was the rule again for this? Okay, I'm assuming this is going to be a zigzag pattern. Okay, either a zigzag pattern or a flat pattern. What do you guys think? Do you think this ABC, it looks like a flat pattern, to be honest, right? It looks like a flat pattern. Okay, so the rules for flat pattern is, I wrote it down somewhere just now. I cannot remember. The rules for flat pattern is that it's a 3-3-5 structure. Okay, so it's a three. Oh my gosh, guys, I really think we're on the correct wave count. It's a 3-3-5 structure. Remember, so 3-3-5 means that within A there's 3, within B there is 3, and within C there is 5. 1, 2, 3, 4, 5. I really think we're accidentally on the correct wave count. Okay, why do I think that? Because you see this A, B, C. So far, so good, to be honest. So far, so good. Okay, so then flat patterns is a 3-3-5. Okay, so A, B, C. Did we really accidentally find the correct wave count? It is so lucky to be able to find the correct wave count on your first try. Okay, remember the criteria is that A is usually the same length. Okay, kind of off, but I mean, it's just a guide, so A is usually the same length. I'm gonna change this to a different color. I'm so confused. There's so much happening right now. This is why I don't, Elliot Wave takes so much time. Okay, if this is truly the correct wave count, right? If this is truly the correct wave count, we should see a 1, A, B, C, D, E. I don't know until where it could do this, right? Let me see the rules for flat. Flat, a bit sneakier. Unlike the zigzag, flats move sideways. Right after a strong 3. Quite, okay. I don't know when this flat is going to end. Let's go find out, guys. My webinar is ended, but I'm so invested. If you guys want to stay on, you guys can stay on. Because it looks like we accidentally found the correct wave count. If you guys want to stay on, you guys can stay on and we can do this together. But otherwise, for the rest of you who, if you have stuff to do, just go ahead. You guys can, I'll see you guys next week. Okay, this is one website that I use. Impulse Wave. I'm so invested now. It looks like we accidentally found the correct wave. Okay, zigzag, no flat. Okay, the rules for flat. A 3-wave moves label ABC. Okay, Sumner wave 1 and 2 is in wave 3 waves. A and B is in 3 waves. We already got that. C is in 5 waves impulse diagonal. What does that mean? 1, 2, 3, 4, 5. Wave B is 90% of wave A, and wave C is 100%, 61% of wave A and B. Okay, let's see if it's a different kind of flat. Irregular expanded flat, corrective 3 waves label, running flat, nope. Out of 3 of this, I think it looked like a regular flat, right? Okay, if this is correct, we should be waiting for a 1, 2, 3, 4, 5. Okay, a 1, 2, 3, 4, 5 should apply to the same rule. So now we are in wave 1. where is it? Wave 1. We need to wait for wave 1 to end. Okay, wave 1 needs to end so that I can draw the ending point. Okay, I need to wait for wave 1 to end. I don't know when is it going to end, but basically this. So once this 1, 2, 3, 4, 5 is done, we should be getting ready to get in for a buy somewhere here once this 5 wave is done. Okay. Yeah, I think when's my next webinar with you guys? I think the next webinar is next Wednesday when we do part 2 of Elliot Wave. By then, I'm hoping we can see something and then we can continue drawing the structure. If break below 3, 2, okay, hold on. Could we find the end of wave 1 using Fibonacci A and B? Hold on, guys. Wave C is 61.8%, 100%, and 120 of wave A and B. Okay, so if we are on the correct wave count, it is, what did it say? 61.8, 100, and 123.6. Okay. Based on the rules for Elliot Wave, okay, wave C should end here, here, or here. And once it reaches here, we are going to get ready to get in for a buy. Okay, where is it likely going to be? I don't think it's going to be B. There's nothing here. At least for C, right? At least there's still like a support here. There's a swing low here. So I can totally understand why it would go to C. For 61.8%, I can kind of understand why it will come here as well. So A, B, C, option A, B, and C, I think most likely it's going to be A or C. So once it reaches A or C, that's when we can consider getting in for a buy. Provided, guys, provided we are in the correct wave count. For all you know, we're not even in the correct wave count. Right? Provided we are even in the correct wave count. But I mean, honestly, looking good, guys. Looking good. It really looks like everything is fitting the criteria. Okay, so waiting for the pullback. If it ends here, can consider a buy here, consider buy here, consider buy. Okay, that's all I have for you guys. Sorry, I need to go now because I really want to sit down and continue analyzing this. I'll be too invested already, but my phone is ringing. I actually have dinner appointment. So sorry, guys. This is all the time I can give you guys for this week. I'll see you guys next week. Now that the level is 3236, 3236. Yeah. If break below, then can start the wave C. Yeah. If it breaks below, then I think you are right, Kubo. I think if price breaks this area and continues down, we should be on the correct wave count. We should be on the correct wave count. And thanks for asking, Salvador. You are right. So based on the guidelines for wave C is supposed to be, oh my gosh, it's so much. Okay, that's all I have for you guys today. Thanks for sitting in. Hopefully we, you know, guys, if we are, let me just tell you, if we are truly on the correct wave count, do you know how much money you can make from gold? If we are truly on the correct wave count, that means you can predict where price is going to reverse, and then we can start playing wave 1, we can start playing wave 3. You can play a very, very, very long buy for gold. We're talking about getting in on gold at a certain price and then just going to sleep. Go hang out with your friends. Go bring your kids to the playground, go hang out, go to the cafe, go on a holiday. Because if we are at the start of wave one, that means that we are at the start of the uptrend. We are at the beginning of the uptrend. So that means if we get in exactly where wave one is starting, you can put your stop loss here, and your stop loss is never going to hit because price is never going to come back to the start of your wave one. Okay, so I do hope we are on a correct wave. It's just that if we truly are on a correct wave, it's super lucky because it's super, super lucky, but honestly, looking good. It really looks like we are on a correct wave. Okay, so that's all I have for you guys. Thank you, Jamilu. Thank you, Jeffrey, Joel, Brian, Jonelle, Cleon, Kubo, Salvador, Samantha, Dean, Derek, those who are leaving and I didn't catch your name, Muhammad, Jovesh. Hopefully the beginning of this wave one won't be the beginning of the war. Oh, yeah, I hope not. I hope not as well. Yeah. Okay, that's all I have for you guys today. Bye, guys. Take care. Happy trading. See you guys again in a week. Bye.